Plan to buy a house in 2022? The good news is that conditions won't fleetly get out of control the way they did last year. The bad news is that supply remains tight and prices are still on an upswing, and the probability of higher mortgage rates looms on the horizon. In today's video, we'll explain what you should expect from the housing market if Fed rate hikes in March. But before that, make sure you press that red subscribe button along with that tiny bell icon to get updated every time we post new videos. Let's get started. The Federal Reserve is anticipated to start raising interest rates coming month and not slow down until well into 2023, though the slope of the increases might be a bit gentler. As soaring demand sent prices into the stratosphere last year, would-be homebuyers frequently found themselves in bidding wars or were forced to make a snap decision on the biggest fiscal commitment of their lives. The results of a December survey suggest that house hunters have tempered their optimism or might choose to stay on the sidelines for the near future. The Fannie Mae Home Purchase Sentiment Index found that while 76% of those surveyed said the present is a good time to vend a house, just 26% said it's a good time to buy. By comparison, 52% of respondents had characterized the current market as a good time to buy a house a year earlier. Events over the past week, including the statements from multiple Fed officers and, to a lower extent, geopolitical turmoil, have convinced markets that the first rate move will be just a quarter percentage point. That change came after dealers had been pricing a move double that size at the March 15 to 16 Federal Open Market Committee meeting. The central bankers have been dousing the idea of needing to go over 50 basis points at the meeting, with New York Fed President John Williams saying last week that there's no compelling argument for the move. Indeed, markets have been unpredictable in 2022 as inflation has run rampant and pushed the Fed into a position where it's basically being forced to strain policy. Consumer prices are up 7.5% over the past year, well ahead of the 2% level that the Fed considers healthy for inflation. Markets have been playing a guessing game this year, trying to figure out just how far the Fed will go. Current prospects are a certainty for a March increase and a slightly better than 50% probability that the Fed will enact 7 hikes this year, which would restate into a rise at each of its remaining meetings, according to CME Group data. The Russia-Ukraine conflict has added another wrinkle for the Fed. Prices for some commodities, such as energy and grains, have surged higher as the prospect of a full-blown Russian invasion has intensified. Fed officers will have to weigh the graces of hiking rates to fight inflation against any implicit economic deceleration the matter could cause. However, Paulson and others say they don't think the situation factors much into Fed thinking, and Utmost economists anticipate rate hikes to do as anticipated. Late last week, for instance, JP Morgan Chase chief economist Bruce Kasman said he expects the Fed to hike at each of its next 9 meetings. That's all for today's video. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.